wake up to a dawn that whispers hope, chasing dreams with heart and scope. Unique, it guides us through the strife, building blocks of a better life. Money flows like rivers.
Welcome back to The Blueprint. I'm your host and career coach, Unique, and today we're continuing our journey towards financial success. Last week we've covered the power of investment, and today we're diving into a critical follow-up topic, insurance. Insurance is essential for protecting your wealth, assets, and loved ones. I'm excited to be joined again by Kurt Garden, our investment expert with over 8 years of experience, and Devonna Qualls, a licensed insurance broker. Together, they'll help us explore how insurance fits into your financial plan and how to make the best decision for your future. Welcome, guys.
Yeah,
Hi,
thanks for having me.
thank you very much.
All right, so let's get started with telling us, how did you get started in insurance?
Okay, so I go first. Well, I get into the insurance industry back in 2016. A friend of mine, I can call his name Mr. Omari Anderson. He put me into the insurance business. I think he was working with a company called New York Life, and I never knew about insurance because the first thing when I hear about life insurance, I think about, oh, someone is going to kill me. But it's not just that, right? So he showed me, and it was very lucrative too as well. So once he showed me how much money you can make from it, what it can do for someone's life and your family, and I sit back and I look at it and I say, hey man, what do I need to do? What tests I need to take? And I go ahead and 8 years later, I'm still here.
Nice.
Yeah.
I got into life insurance, really just being around the right people and coming across some information where they were talking about how they came into like large sums of money in their family. And it was like, yeah, do life insurance. And so immediately in my mind, I kind of thought what Kirk thought and was like, wait, so did they all just try to kill off their family members for the life insurance? Watching too many movies. So then I realized, like, man, like the amount of money that is passed on or that they utilize while they're even still alive blew my mind, because my family, I only knew about will and testament. And
Yeah.
from what I seen, the results was really everybody was fighting over crumbs, or for the most part, we had to pay for everything. So yeah, that intrigued me. Like, no, I really need to know this. So
Okay, that's good. So since both of you brought this up, and this is a big thing in the Black community, where we think that if the topic of insurance comes about in our family, that our parents think that you want to kill me. That's why you're talking about, mommy, you need to get life insurance, or daddy, you need to get life insurance because you have ill intent. What would you say to those people who believe or their mindset is like that?
Well, the insurance is one of the best kept secret. Okay. Because number one, I look at insurance as transformation of wealth, also a way that you can change your family generational situation, right? Why? Do you know that when someone passed away in life insurance, when they receive that money is tax free?
Okay,
That
didn't
a
know
lot of
that.
people don't know. It is tax free. So if your mom, dad, whatever family member passed away, and let's, for example, they have $1 million policy, that's $1 million tax free.
Wow.
No, you got to be careful of who you let be a beneficiary, because there's people out there, there's bad apples, bad people everywhere you go in life.
Yeah.
Okay, that literally will get an insurance policy on someone to take them out. But no, you can't think like that. It's your family, you are a mom or you're a dad and you have kids. It's up to you to change the situation. Let it be much easier for them for the future. And life insurance is that key to change people's situation. So stop thinking about, oh, they're gonna kill me, or no.
Yeah.
No. Think about your family. Think about what you can do for your family. because not everyone was fortunate enough to save money. You can't save your way to rich. You can't to get to riches. You can't do it. You have
Yeah.
to have some form of a vehicle or some things that will, and life insurance is tax free. And the earlier you get it, is the cheaper it is.
That's facts. That's what I've realized too. Anything you want to add to that, Devonna?
Well, to piggyback on what Kirk said, definitely start young. Like
Yes.
that is super key for everyone. Like I didn't get my policy and I want to say until like 2022 or something. And at 43 years old, that's ridiculous. You want to start as young as possible because the benefits of it are amazing. For the most part, I think it's really us just having these kind of conversations. I think the more they see people of their background and culture actually involved with it, actually can explain it, because I think that's what it was for me. Like once I seen exactly what it was and what you can make from it, I'm like, what?
Yeah.
Are you freaking kidding me? Like, first of all, we all really need it. That's one. Two, who couldn't benefit from tax free? Like,
Yeah.
no, we're not thinking about, yes, the countdown to someone passes away to utilize it. We just understand that, especially with certain types of insurance, where not only are you protecting your assets, but then on top of it, it's building cash value.
Yes.
So people weren't aware of that. So it's like, hey, it's tax free, it's protected, right? And then on top of it, you want to make sure your family is okay,
Yeah.
right? So everyone is on top of it from the beginning. Because I think about my family, I've had so many deaths from COVID, right? And I'm actually in the predicament where I have the mindset and know what to do with money. I can imagine if I was getting that, couple $1,000,000, couple $100,000 to now set the rest of the family up for success, So
Yes. You mentioned getting in early, and I know people probably look at me weird for doing this, but I got my son life insurance, and a friend of mine said to me, why would you take out life insurance on your son? One, it's it's great to get in early. So I've locked in my son's insurance rate for a lifetime. So the value that I'm paying now is what he will pay to extend that insurance for his life. So nothing else will be added to that. Secondly, it's building an investment portion as well. So when my son gets to 18, he would already have money that he can use for college. And so people look at it from the standpoint of she must want her son dead for her to be taking out life insurance. And because of the small mind and not being educated enough around insurance, that is why the Black community is in this predicament. Because I had a conversation with a white guy, and he said to me, one of the things that white people do is they all take out insurance. And that is why there's generational wealth in the white community, because John Brown knows that one day, eventually, it's inevitable, he's going to die. And why not set up his family for success in the event that day comes? So I think it's something that we need to change our mindset about. We have this crab in a barrel mentality and this fear that something is always going to happen, or this person wants to take me out, so I'm not going to do this. I know it happens. It happens a lot in the white community as well, but we have to put that fear aside. Anyways, I'm done preaching now. I'm done.
I would also like to add to getting insurance, right? So you don't have to do lifetime payments when it comes to insurance. Like for your son, let's say, a lot of my clients, I normally set up your kids like this. They need insurance. They have young kids, especially newborns, right? So I'll tell them, say, hey, this you took out a policy on your newborn. You're the younger the child, the better it is. By the time that kid reach 18, they got money for college or if you want to buy a home. But guess what? It's only a 20 pay. It's only payment for 20 years. After that 20 years, there's no more payments.
Yeah.
You see? So you're the parent, you pay that policy for 20 years. After 20 years, there's no more payments. It's locked in. He doesn't have interest. Right? So that's what people need to know. You don't have to do a lifetime payment when it comes to insurance. You can do 20 pay, whole life or IUL. Right? IUL is an index universal life policy. Right? So there's several ways you could do this thing.
Yeah. All right. So as a follow-up from last week, so last week we spoke a lot about investment strategies. How can insurance complement our investment strategies for long-term financial security?
So there's several ways you can do it. Again, so I normally tell my clients about annuity. This thing is something, it's amazing, right?
Mm-hmm.
So an annuity is a lifetime payment. So these are for people who, let's say you have a 401k and you want to roll over into something, a different vehicle, right? You can roll over 100,000, 200,000, $1 million, whatever the number is, into the annuity. Not only the annuity is going to give you a good return, 10, 20% return a year on your investment, depends on what type of annuity you set up. Not all of them have that type of return, but it is safe, right?
Okay.
It's felt protected from creditors. So for example, let's say you're driving your vehicle tomorrow. Let's say you're a multi-millionaire guy. You have your money in the bank. You're driving your vehicle. You hit someone, kill them, right?
Mm-hmm.
That person, family can sue you for what's in your bank account or even your 401k. They cannot go to what's in your annuity. It's sheltered.
Okay.
What the annuity does when you reach a certain age, let's say you do a 10, 20-year annuity, when it matures, the annuity start pay you monthly for the rest of your life. When you passed away, your beneficiary, some of them come with riders, life insurance riders, they get a lump sum money. You see what I'm saying? So annuity is payment for life. Take care of your lifetime. A lot of entrepreneurs like myself, we don't have a job per se to have a 401k. So
Yeah.
you can build your own. And that
Okay.
really come into play. Also on I Index Universal Life. There's several ways you can do this.
Okay.
See?
Yeah, that's why I got super excited. And what made me say, hey, I'm gonna get my license for the index and then also for the annuities when I was going through my education for it. That wasn't even my plans. I was only focused on truly the life insurance side. And then when I saw what the annuities can do, I was blown away. And I'm like, they're so smart because I think about how much money we waste on BS or maybe for like CDs, or I know they have like the Christmas things you can do at the banks, right?
Mhm.
And I think about how low the interest return on that is such a waste of money. But looking at the annuities, knowing like, again, at 43 years old, I'm thinking about what I did in my 20s, 30s, and I'm like, I can be getting a lump sum of money for the rest of my life at this age right now if I knew what I knew. Because again, those, and then you can choose ahead of time how much you want those monthly payments to be. So that's another thing that I love about it. So if you're saying, hey, I want this for my child when they graduate, all right, let me get an annuity for this. I can get an annuity if something happened to my house and businesses and I need the bills to still get paid. Like there's so many things you can prep for in advance. And so I'm all for the annuities as well, Kirk. I'm definitely on that one.
Nice. So what type of insurance should young people prioritize then? Because you guys are speaking about annuity. What type of insurance should they prioritize first?
So for young people, see, most brokers will tell people, yo, get an whole life policy. You need to get a whole life policy. My thing is this. You are young, you need to get as much money as possible in your insurance policy, right? You're young. I think term life insurance works perfectly for young people. Why? They're young and they can get a large amount of money for a lower price. And you do a 30-year return of premium policy. If you care about the money, say, you know what, Kirk, after 30 years, all that money I spend is going to go away. Well, you could do a return of premium. After 30 years, all the money that was paid into that policy, the premium that you paid in the policy, if you outlive the policy, because term life means is a term, 10, 30 years. After that, on, right? It's a term. So after that 30 years, if you do a return of premium, all the premium that you paid in the policy comes right, they cut you a check.
Oh.
So if 30 years you spend $50,000, you're going to get that check back. You're going to get a check for $50,000.
But that one is hard to get into, right?
No, it's life insurance comes down to your health.
Yeah.
If you're healthy, you could get any life insurance, any one you want. Return of premium, regular term policy, it all comes down to your health. Okay, so
Okay.
as I say, if you're healthy right now, find your local insurance guy or wherever you want to find insurance girl, gal, whoever, set yourself up. You can pay $50, $30 a month. You're young. Do it. Don't wait for when, number one, another thing I got to tell you guys is not just about debt. There's a
Mm-hmm.
thing called living benefit riders. Speaking from experience, my policy that I have on myself, I got living benefit riders on my policy, which means it's not just about death. If I get sick, cancer, heart attack, stroke,
Mm.
kidney failure, any form of major illness, I can take money out of the policy while I'm alive, up to 95% of the death benefits.
Mm.
So it's
Okay.
not about death.
Is that the same as critical health?
Critical illness rider,
Okay.
yes.
Okay.
Critical illness riders, all of that, yes. So it's not just about death when it comes to insurance. So these are things our people need to know. They don't know these things.
Mm.
Why? Because the moment of your life insurance, oh, I don't want to do it, blah, blah, blah. No, we gotta read more. We gotta communicate more, talk to more people, stop this standoffish, get to know things.
Yes.
That's not exactly how I feel. That's why I'm always studying. I'm always reading something somewhere, especially when it leads to generational wealth, because I'm excited to see our people come up on the other side. I kind of think of like when we talk about diversifying our portfolios, and I think about that also like when it comes to insurance, annuities, and things like that. So I usually try to think of it as, hey, neither one of them are bad or good. They have their pros and cons, but if you
Mm-hmm.
use them for the right stuff, I think that's where the benefit is. So I try to think of like your term life, which is the ones that are set 20 years, 30 years, stuff like that. I'm like, hey, this is to supplement for like paying off college, paying off
Yeah.
mortgage, things along that avenue. But then you have the whole life when you're thinking about passing off that generational wealth, if that's the case something happens to you. So I'm like, hey, we have the investing side where you want things that are going to make you money now. And then, like he
Mm-hmm.
said, the protection part, that was something that really blew my mind. I mean, you even could get sued. It doesn't matter what it is. Nobody can come and touch that money.
Wow.
And I think about how suspect we are. Like I said, they tell us to get wills. That's the only thing I used to grow up hearing, like, oh, you have to get a will. And by the time the state took their cut and everything else, there's like nothing left. And it's definitely not giving you generational wealth.
Mm-mm.
So
Insurance, you don't pay taxes, but on the will and the money
Oh
gets.
yeah, you pay.
Okay.
Yeah, you definitely gonna pay tax, estate tax. They gonna kill.
Wow.
and big tax too. Not it's not a pretty sight.
Wow.
We don't want to get off topic. I don't want to get off topic. I can speak from experience. I got a client. The guy make $10 million a year. Let's just put it as that. I visit a guy. It's a white family owned business. They all work in the office. The guy been working construction ever since he was in the 8th grade. His business doing amazing. I visit the guy. The guy get a $2 million policy. His premium is $1,500 a month.
Ooh.
And I asked the guy, I said, hey man, why you're making good money? Why? He said, listen to me. When that day do comes and passed away, there's gonna be estate tax, there's gonna be all these things, and I don't want to leave all that burden to my family. He said, insurance is tax free. So if I leave this $2 million to my wife, she's gonna get $2 million tax free.
Wow.
So again, insurance, right? It's amazing,
Yeah. So with that big value that you just mentioned, I know that person probably rich and can afford it. But
Mhm.
for the little people, we spoke about investment last week, and now they're in the frame of mind that, all right, I'm going to try to stop doing my nails and stop eating out as much so I can save this money for investment. But now we're talking about insurance. So they may be like confused and be like, which way do I take this money and put it? So what would you say to those people who are looking to balance paying insurance premium with other financial goals like investing or saving?
So what I was saying earlier about the guy, where I say his premium was $1,500. He's the guy is 59 years old. So back to what I'm saying, the best thing to do is to get in early when you're young.
Okay.
But you can be 30 years old and get $1 million policy for $50 a month, probably
Okay.
$40. You see the difference? That when someone is 59 and try to get $2 million, they're paying 1,500. It's a different. It's all about when you get in. Oh, the sooner the better,
Yeah.
right? So my well, I'll tell the younger generation is that, hey, people my age, I think I'm younger generation, right? I say, hey, get your insurance early, right? And budget yourself. Write it down. Say, hey, man, I can only spend $30 a month. Well, get a policy that fit $30 a month. And if
Okay.
you're 38, 39, 30, 29, $30 can give you $200,000-$300,000 policy,
Okay.
right? And when you get insurance, don't just look at how cheap the company is. Another thing you guys got to do your research on the company, because a lot of these companies, they're here today and they're gone tomorrow.
Yes.
You want to go with companies that have been in this industry for many years, 100 years, right?
So what happens in that sense if I have an insurance policy with a company that decide to close business? What happened to the money? Is there any protection around that?
Well, most of these insurance companies, they also have insurance for themselves, right?
Okay.
So, for example, I know companies having $100 billion in insurance on themselves,
Okay.
right? So I don't know if I can call the names of these companies.
No, let's not call it.
We're not going to do that. But yeah, just go with companies that they're established.
Okay.
Google search, you see what's going on. They tell you about the company.
I would say, if it just popped up 2 years ago, I probably would stay away.
Exactly.
Well, you know what? Most of the people that I speak to, that have some sort of income, they're usually working. They're usually investing into 401k. So then I have to sit down and talk with them. First, I just educate them and show them that, hey, this is what you have and what you're investing into, right? And then a lot of times they'll tell me, oh, but the company is vested, extra 2% or 3% on top, right? But then I have to talk to them about, okay, so let's talk about inflation. Let's talk about your money being exposed. So a lot of times they can see that the same money they're using into their 401k is something they can easily transfer over into a different vehicle that has better benefits, more protection. So a lot of times I try to find ways to offset what they're already spending. Like, hey, this is where this money is going. It don't need to go there. Let's put this one here, stuff like that. Other than that, it really is being honest with people in the budget, like, and again, if they're young, it's so much easier because you doing $20, $30, $40 a month towards, like you said, a $300,000 policy. That sometimes you got to be the first one to start, and that may be what you're starting with. Like in my family, I'm probably going to be the first one that has the type of policy that I have.
Yeah.
So, budgeting, being honest with your finances is super important. A lot of people take a financial class, guys. Like everybody, you can research financial literacy, so we can at least get our budget together. And I promise you, if you look at I make people print out their bank statements, and I make the mark of all the frivolous stuff, and we add it up, right?
Yeah.
And I'm like, how much is that? So let's see how much if you just spend this for the next couple of months, and see what that could have went towards a type of policy. Like I think visuals help people as well.
All right, good. So we spoke about critical illness. What type of insurance, aside from life insurance and critical insurance, should people consider but sometimes overlook?
Disability insurance.
Okay.
Disability policies are amazing, right? Basically, you got disabled on the job and you can't work for a few months. The disability policy kicks in and take care of you. Some of them give you half of what you was making on the job. So say you was making $8,000 a month, they give you $4,000. Or you got disability policy that will give you the entire $8,000 a month. Depends on how you want to set it up, right? So
Okay.
disability insurance I think is a very important thing that everyone should also have.
Okay.
Especially if they have a job.
Yes.
Health insurance. Not enough people have health insurance.
True.
Like like it blows my mind, but it's super important. I know sometimes it can be expensive, but health insurance is super important, especially for entrepreneurs too. Like we go a lot of time without that, and then if we don't have our riders, our living benefit riders, you're going to be messed up. So having that knowledge is important because those benefits are really like I was looking at those and I thought about how many of my family members could have utilized that too. Like them hospital bills become insane, you know, but your life insurance can cover that. But yeah, like health insurance, I feel like we got to stay healthy now, take care of ourselves now. And then I don't know if you ever had to go to the emergency room lately, but that bill is out of control. It's like people rather just not even go.
Yes, that's true. Um, so with so let's recap. Health insurance, disability insurance, life insurance, and critical illness insurance. Those are four of the main ones that you need to get. How can they determine what a good coverage amount is? Not the premium, but overall for each one of those type of life insurance, what's a good coverage, or is there a way to determine it? Because I know that can be relative. So, is there a way to determine what the best coverage is for a person?
I normally tell people to write their debt. So, for example, let's say you own a house and you hold $400,000 on the mortgage, right? And you know whatever stuff you have. If you passed away tomorrow, if you get sick tomorrow, how much you think it'll cost you to take care of all of stuff in your life? So write it down. 400,000, 200,000, add it up. What's that? $500,000. Okay, let's play it safe. You probably need to get around 700,000 in insurance. Okay. So another thing, younger people, that's why I tell them when you're younger, term life insurance is good for you. Because in term life insurance, you can get a lot of coverage at a lower rate.
Okay.
Now, when you're older, a senior, you don't want to you don't need no term life insurance. You need a whole life policy because you might outlive the policy.
Okay.
You get what I'm saying? If you are 70, 60 years old, you're trying to get
a 30 year
$30,000, they're not going to give you 30 years. They might give you 10 years if you are lucky, or 15 years. And you might outlive 10 years. So you want to go for a final expense whole life policy or an IUL.
So look at your debt, look at the number that you will owe if anything happens to you at this point that your family members are going to have to take care of and determine it based on that. Anything else you want to add to that, Devana?
One thing I came to notice, which is kind of what made me really also want to get my insurance, is when I first was looking and I was going to like some of the top names to get insurance, I recognized that they only can offer you really what they have to offer, right? I realized there's different packages you can get, or different ones offer different type of riders or different benefits rather. So what I learned is going through agents, especially like definitely do your research, but I realized that going through agents, depending on your resources, like for where I work at, we have access to majority of the insurances. So that allows me when a client comes in, I get to really figure out, all right, what's your criteria, what you need, and actually put you in the best vehicle versus me only being stuck to one company. And now I'm basically forcing you into a package that may not even be the best. So you can always tell people, always do your research, like shop around. It's the same thing, right? Definitely still start younger. But if you still have to do it older, like I just feel like the agents who have integrity, they have a better chance of helping you get exactly what you need for your situation. Because like I said, we have the option to put you with the right company because we'll be contracted with multiple versus if you just went to, like, just say F&G. F&G only can offer you what they can offer you. They're definitely going to try to get you to pick something versus somebody like me. No, I want you to be with the best package you can get.
That's good. So when we a lot of us look for the best policy or the best company to go with by just simply Googling. And sometimes because of these companies doing sponsored ads, a lot of it is at the top. So we tend to click the first one that we see, and what happens next is we get a bunch of different calls from a bunch of different people and text messages from left, right, and center. What strategy can a person take to find the best company to work with? Because you mentioned it's important to choose the best company. So what strategy can they take to find the best company?
You talking about the agents to work with, companies that agents should work with?
Agents, or yes, so
The,
finding a good agent to work with or finding a good company to have your policy
so
at.
the insurance industry, it's pretty small. It's big, but it's small. The major players, trust me, the major players will come up on in the feed on Google.
Okay.
God, their money is so long. They've been in this for generations, for hundreds of years. These are not companies that have been here for 10 years ago. These companies have been around for 100, 150 years. You see? So it's not hard to find these companies, you know. And another thing about insurance goes by age and sex.
Mm.
And also if you're a smoker or non-smoker. Female pay less for insurance than male. A smoker pay more for insurance than a non-smoker.
Okay.
And not everyone is qualified for insurance. It's not like buying a pizza, you don't get whatever you want, right? It comes down to your health. You see? The good companies, they're there. If I say one name right now, everybody agree with it. Oh yeah, I heard about that company. It's all over this is there. You see? So do your research, right? Talk to people, friends and family, if they have insurance. A lot of our people don't have insurance.
Right.
That's why I love health insurance, because stay as healthy as you can and you're gonna get amazing insurance.
Yeah. Some people need insurance, but they can't get it because of their health.
All right, awesome. Well, is there anything that you guys think that we didn't touch on that is important for our listeners to know?
Another thing I want to say about insurance as well, there's also a thing called guarantee insurance. So you have to be at least 50 years old. So you're seniors. So it doesn't matter your health condition, HIV, cancer, stroke, whatever critical illness you have, these companies will cover you. But a setback in that, you have to live for 2 years, which means that if the client passed before 2 years, the beneficiary only received the premium that was paid in the policy plus 15% interest, right? So the insurance company is saying that, hey, we're going to cover you. Know you have HIV. We're going to cover you. Are you 50 years old? Okay, we'll give you this insurance, but you have to live for 2 years. You see? So yes, you can get insurance. Anyone can get it. If you're 50 years old, you can get insurance, but you won't get no $100,000 or no $200. They normally stop at like $25,000 to $30,000 in coverage. Okay.
The last thing I would say is just how important this is to generational wealth. Right? I want my people to be in such a different space where we can like actually affect what's going on in politics. Like it actually means something when we're wanting our viewpoint to be heard. I want to be able to change the school systems. So I feel like that starts with really having the right amount of wealth. And so I understand that with that side of things, we don't. It's almost like I don't know if our people are scared of when we talk about generational wealth, or maybe because it's so foreign to us at this point, that it makes us not even want to talk about the topic. So I'm excited about this call because I feel like once we really understand what life insurance is and these different type of insurance can help us, I think more of our people will get on board early enough. We'll definitely have the whole family involved. You know, I feel like people should start sitting down with their family members and being like, all right, hey, from grandma to the newborn, who has insurance and who does not, and making sure everybody gets covered. Because we never know. It could be like the most random thing could happen to the one family member nobody expected, or to the one family member that does hold everything down. And not only will you be covered, but now you have a chance with a good amount tax-free money to make changes happen. So I really think wealth transfer is such a big part of why we need to keep discussing this.
I like that. So I have a question for you. what advice or what's the best way for a person to sit down with their parents, sit down with their grandma? What should that conversation look like to say, hey, this is what life insurance is. This is why it's best for you to do it. What would that conversation look like in your opinion, Devana?
I could talk about when I spoke to it about my mom, for instance. I was going over her policy. Like I think I talked to her about it like last year. Once I started really understanding things, and I was like, "Hey, Mom, what do you have?" Just ask her from there, like, "Hey, do you have life insurance? What do you have?" Especially because of COVID, it made the conversation come up a lot more because we were having multiple debts. Like I think we had at least 3 a week apart, and only one had insurance. But again, nothing was enough to cover everything that needed to be covered.
Yeah.
So I think right now with everything that's happened from COVID, I think that's a great place to start, because everybody was aware of how many deaths happened so fast. And again, that's something none of us, I think, could have predicted, right? And maybe have like some sort of video that kind of visually shows it to me, because I think visually they need to see like, hey, these are the end benefits of it. This
Yeah.
is us having protection. I don't think no one doesn't want wealth in their family, but
Yeah.
it's like, do we really know how to acquire it other than thinking we're gonna work 3 to 4 jobs, knowing that's never gonna get us there, or saving as they try to tell us. So yeah, like I would just tell them like, listen, we have to be more prepared. There's 2 benefits to it. For one, being prepared for unforeseen expenses, and then really starting that generational wealth and showing them, hey, this is the amount, especially for the younger ones. Like, can you imagine paying this amount and having this much coverage later down the line if something happened to you or your family?
That's good because I find that, let's take, for example, um, those communities that are those families that don't have that much money. When there's a death in the family, then everybody now has to be scraping from left, right, and center in order to find that money for a funeral. When if that person had life insurance, they wouldn't have to worry about where the money is going to come from for that funeral. So that's also something that needs to be taken into consideration. What burden are you leaving behind for your family to take care of when you're no longer here?
Yeah, because I mean, everybody may not be able to get insurance at the family meeting, but at least we can figure out the hierarchy. Like, all right, who's healthy, who's not, age, because again, age and health and all that stuff matters. And it's like, maybe we got to scrape a little bit now to get these policies paid, but it's going to benefit us so much to try to scrape on the end of things.
Fact.
I will also make sure when you get your insurance, you have life insurance and not an accidental death insurance.
Oh.
Big difference. Okay. A lot of our people, they like to be cheap. Say, oh, I have some cheap policy. I'm only paying $20 a month for $300,000 or $200,000, and I got a life insurance.
Let me go check mine.
And they never read and look over what they have, because there's bad, as I said, there's bad apple in every industry. There's agents out here who are selling people accidental death insurance and telling them they have life insurance. I run into clients like that in the field before who told me that, hey, Kirk, I have life insurance and I'm paying $20 a month for $200,000. And I'm like, hold up. You pay $20 a month for $200K? When did you get this policy? You was 2 years old? No, I get this policy when I'm 35, 40 years old. Are you paying
Wow.
$20 for $200K of life insurance? Yes. And I said, can I look at it? Give me the policy. I look at it. Clear to see, said accidental death.
Oh my goodness.
So I'm pointing out, I said, listen, do you know what an accidental death policy is? Difference between an accidental death and a life insurance. Yeah,
Only
when
when you
I
meet
pass
in an
away,
accident?
my family get the money. I said, no. Accidental death only pays if you die from accident. So if you die from natural cause, it's not gonna pay.
Okay.
An
Well,
accidental death policy is cheap.
guys, you hear that? Go find your policy if you have one and take a good look at it. Call the company if you need to. Have that conversation because it's important to know if you have accidental or life insurance. All right, guys. We have discussed so many things about insurance today, but I can't end it unless we do our rapid fire questions. Are you ready for that?
All right.
Go ahead.
Let's get it? Okay. How often should you review your insurance policy?
Yearly.
Yearly, I agree.
You agree? Are you just agreeing because she said that?
No, I agree. Monthly.
Okay.
Look
No,
at
maybe monthly is too sharp, but yearly. Okay. All right. What's the most essential insurance that everyone should have?
I see a term life insurance at an early age. Lock it in quick. It costs less. You get a lot more for your bucks. And yeah, young people, get your term life insurance. 30 years, $40.
I'm gonna stick with the the index universal life insurance. Just because I like to get the protection and get that cash flow coming in as well. So
Mm-hmm.
Nice.
I'll be biased.
One mistake people often make with insurance.
They think your accidental insurance is life insurance.
Okay.
They
Yeah.
don't read what they actually get. Like, read what you're getting. Don't just look at the death benefit at the end of that.
Nice. And short-term or long-term disability insurance?
Long-term disability insurance.
Yeah, long term.
Okay.
Mhm.
What's the best way that a person can lower their insurance premium?
Well, the things that people understand, you can't lower your
Yeah, I'm gonna
insurance.
say I don't think you can lower
can't
it.
lower your life
You can increase it.
If you when you lock in for insurance, you can't just go and insurance goes by health and age. The policy you get when you're 20, you're not going to get the same thing for the same rate when you're 40 or 50.
Right.
You
Mm.
can't lower it. So whoever out there telling these people you can't lower it. Okay?
Because even if you want to increase it or change it, you have to still get another evaluation because they're
Mhm.
like, hey, you're older from the last time you requested this.
Yeah, you might not get approved next time because now you have kidney failure, now you have a heart attack, now you have a stroke.
What if I was sick when I get it and then I got rid of that sickness and go back and be like, okay, I'm no longer sick. Can I get this?
Yeah, so I have clients who had cancer in the past. A
Right.
lot of insurance companies want to make sure you're cancer free for at least 3 to 5 years,
Okay.
and then they will cover you.
Okay. All right. So that's a way then.
Mm-hmm.
Okay. All right, guys. Well, that's a wrap for today's episode of The Blueprint. We've explored the vital role of insurance in protecting your financial future and learned how to make informed decisions to safeguard your assets. So don't get that accidental life policy. Ensure that you're getting life insurance. A big thank you to our guests, Devonna and Kirk, for joining us again to share their knowledge. Remember, securing your wealth isn't just about investing, it's about protecting it too. If you missed last week's episode on investment, be sure to check it out. Thanks for listening, and we'll see you next time.
Wake up to a dawn that whispers hope, chasing dreams with heart and scope. Unique, it guides us through the strife, building blocks of a better life. Money flows like rivers wide, budget smart, keep your pride. Entrepreneurial spirit high, reach for stars.